Year to date, the S&P 500 is now negative, and in the last couple of weeks, we have seen the market fall by almost 5%. And the downward pressure that we're seeing in the market is revolving around the trade war between the US, Mexico, Canada, and China, with Trump recently announcing a 25% tariff on Canada and Mexico. There's a couple of reasons why this is having such a negative impact on the market. The first has to do with companies' earnings. At the end of the day, companies that are bringing items in from overseas are now going to have to pay a premium, and this premium is likely going to be passed along to consumers, which results in consumers being able to buy less goods or services. And the second reason the market is reacting so negatively is as these companies are bringing goods into the country and they're increasing prices on those goods, that overall is going to be inflationary. And as the Fed looks at inflation and sees it potentially increasing over time, they are more likely to at the very least hold rates steady, if not potentially increase them. And as all of this drama and uncertainty is going on in the markets, this leads to opportunities for individual investors like us, because what we see as the market continues to drop is valuations for companies hitting very interesting levels. So today we're going to be talking about 5 different stocks, a few of which I am watching and a couple that I am actually actively buying. So make sure you stick around till the very end of the video, because I will be opening up the YouTube portfolio and showing you specifically the moves that I'm making in the market. Thank you guys so much for the continued support. If you enjoy this type of content, make sure to subscribe and drop a like down below. The first company we are going to be talking about is Super Microcomputer. Super Microcomputer has had one of the highest volatilities in the last month of any stock in the market. It ran up from $30 per share to $60 per share and is now back down trading around $40. This is all due to the fact that they had a couple of delinquent filings. Investors drove up the price leading into the announcement of their filings, and after the fact, they have now decided to sell the stock off. And this is despite the fact that they filed all their numbers in time, they're staying listed on the NASDAQ, and they even provided some very strong guidance for 2025 and 2026. Right now, according to Yahoo Finance, they have a forward P ratio of a 10.72. A 10 forward P ratio for a company like Super Microcomputer that is growing extremely fast is very low. Right now, analysts are projecting for 2025 that EPS will come in at $2.59. There are only 2 quarters left in 2025 for Super Microcomputer, so this puts their valuation at around a 15. If we look forward to 2026, analysts are projecting $3.75 of EPS. That puts their P ratio at a 10.3. Both of these valuations are extremely low. I could easily see Super Microcomputer trading between a 25 and 35 forward PE. And when I talk about high growth for this company, it's very easy to see when looking at their top line revenue numbers. For the current quarter, analysts are projecting them to come through with $5.42 billion of revenue, up 41% year over year. For the current year of 2025, revenue is expected to come in around $23.95 billion, up 60% year over year. And for 2026, that growth is expected to continue. $33.21 billion of revenue, growing by almost 40% year over year. If you've been following the channel for a while, you know that I hold Super Microcomputer. I originally started building out my position in mid to late January, and overall that turned into a very nice position leading into the middle of February. However, I did not sell out when we saw the stock hit $60. I continued holding, and I'm still holding on to my position. What we have seen in the last month is a lot of people using this as a short-term trade. I myself even considered doing that with the stock, but after hearing about the potential growth moving forward, I've decided that I think this stock is more of a hold. I think $60 to $80 is definitely in the future for this company, and I could easily see it getting close to that $100 mark over the next 2 years. However, right now, I am not a net buyer of Super Microcomputer. If we see it drop down to that $25 to $30 range, I could potentially add to my position though. The next stock that is very interesting to me is PayPal. PayPal is another one that I do hold in my portfolio, and right now it's down around 25% from the highs that we saw back in January. After January, they announced their earnings and provided some really weak guidance, and that caused the stock to trade down in a major way. PayPal is another stock that has a very cheap valuation. The forward P ratio on this company is sitting at a 13.50. However, it is a little bit of a slower grower, and that has been PayPal's biggest problem. When you look at their top line revenue estimates, they are only expected to grow by 4% year over year, from $31.8 billion in 2024 to $33.06 billion in 2025. And that really doesn't increase much in 2026, only around 6.5% growth year over year expected in that year to around $35.3 billion. However, in the last couple of years, PayPal has primarily been focused on bottom line growth. In 2025, they're expected to put up $5.04 of EPS, up from $4.65 in 2024. That is around 8.4% growth year over year. And then in 2026, analysts are expecting $5.64 of EPS, which is up around 12% year over year. But for valuation to expand, what investors want to see is strong top and bottom line growth numbers. That's how they can get to some of these price targets that analysts have out there. Because right now, the average price target is $95.35. That is obviously well above the current price, and that has a lot to do with the fact that most of these price targets came out prior to the earnings. If we look at the high price target, it is $125. So they have plenty of runway to the upside, and right now the low price target is actually $70, which is even slightly above the current price. If I didn't already have a position built out in PayPal, I think now is a decent price to look to get into the stock, because it is 25% below the highs that we saw just a few months ago. And if PayPal does perform well on their bottom line numbers over the next couple of years, if they even see any sort of higher growth on their top line, I do think that valuation could expand and they could easily get back to these levels, if not much higher. And the next stock on this list is Palantir. Palantir in the last few weeks has traded down by almost 30%. At one point, the stock traded around $125 per share and is now trading around $90. The problem with Palantir is that they do trade at a higher valuation. Their forward P ratio is currently sitting at a 147. Oftentimes, when the market experiences a drawdown, these higher valuation companies sell off by a higher margin. And the reason I put Palantir on this list is because if there is a larger drawdown in the market, and I'm talking larger than we have seen so far, I think Palantir could be hit by a significant margin. Right now, EPS estimates for 2025 are 56 cents. For 2026, they are 70 cents. I think these are reasonable for Palantir to be able to achieve. However, a valuation that I think is more likely for Palantir and more sustainable for the long term is 55 times earnings. If we look at what that would mean for 2026, that means that Palantir should be trading closer to $35 to $40 per share. I don't think that Palantir is going to fall back to those levels, at least in the short term, but maybe over the next year we could see the stock trade down to those points. I think that those are decent entry points. Anywhere around that $35 to $40 mark, I think is probably a reasonable price to pay for Palantir to capitalize on long-term growth for this company. Right now, the top line is expected to grow by around 32% in 2025. And then in 2026, growth is actually expected to slow down to 26%. I think this could actually be low. I think we could continue seeing Palantir grow by maybe even 35 to 40% in 2026. We'll take a look at the YouTube portfolio here in a second. I do own shares of Palantir, and I'm not planning on selling out of them, even though I think the stock could potentially be overvalued currently, because this is one of those companies that's very similar to Tesla, and it always seems to run up when you least expect it. So right now, I'm not planning to sell out. However, if we do see a major drop in this stock, it could be one that I actually add to my position on. Now we get into the stocks that I am actually buying. That is Microsoft. I've talked about this company and some interest in buying and building out my position in Microsoft a little more over the course of this year, because in the past year, this stock is actually down by around 0.5%. This is very interesting to me, because if we think about Microsoft's business in the last year, they have built out so much when it comes to AI and a lot of their AI infrastructure, and they've set themselves up well for the future. So for the stock to be trading at the same value it was a year ago is very interesting to me. And on top of that, it is down around 15% from its all-time highs of around $470 per share. What this year of trading sideways has actually done for Microsoft is it's helped their valuation, because over this time period, they've been able to grow their earnings while their stock price has stayed the same. That's resulted in a forward P ratio of around a 25 to 30, despite the stock consistently trading around a 30 to a 35 prior to now. And we can see this reflected in their EPS numbers. In 2024, they put up $11.80. For 2025, analysts are projecting $13.15, and then in 2026, they're projecting $15.06. That means that based on 2025 EPS numbers, Microsoft is trading at a 30.4 valuation, and based off 2026 numbers, they're trading at a 26.5 PE ratio. And this is a company that, despite having massive revenue numbers, is still able to grow their top line by double digits. In 2025, analysts are expecting 13% revenue growth, and then in 2026, they're expecting 14% growth. So Microsoft, as I mentioned, is one that I am purchasing. I think if the stock were to go down below $385 per share, I would have to buy a lot more shares of this company, because Microsoft to me is one of those companies that just consistently is able to grow their top and bottom line numbers. And the second company that I bought today is none other than Google. In the last month, Google is now down around 15%. And Google is the Magnificent Seven stock with the lowest valuation. Their forward P ratio is sitting at a 19.3, which is incredibly low for a company of Google's quality. And Google is another company that has strong and consistent growth on both their top and bottom line numbers. For 2025, analysts have them growing their EPS by almost 12%, and that is actually expected to accelerate in 2026 to 14.1%. And Google is also growing their top line numbers as well, expected to grow by 11.42% in 2025 and 10.91% in 2026. A lot of people are worried about Google's search business getting disrupted. However, for me, I don't really think that's going to be a possibility. I think if the government were to step in and try and break up Google, then yes, maybe something could happen. And we have seen things and talks about that potentially occurring. However, for me, I think that risk is a little bit low. And when it comes to AI, I don't really see AI disrupting Google. Google is one of the top players in AI, especially when it comes to search with Gemini. So I don't see them losing that race. They already have the name brand there. As long as they can keep up with a lot of their competitors, they should stay ahead in that market. And as I promised, we are going to take a look inside the YouTube portfolio. It's currently sitting at a value of $60,578.93, down almost $6,000 from our all-time high of $66,000. And here are the positions in the YouTube portfolio. We hold Alibaba. There's no change made to this position, still 15 shares, up around 83%. Google, we bought an additional 5 shares. We are now sitting at 10 shares in total. We are up only 1.1%. If this continues to drop, I could easily see myself adding more to this position. Apple, no change there, still 4 shares, up almost 400%. Microsoft, we added 3 shares to this position. Now we are only up 22% because we saw a significant increase in our cost basis. Palantir, no change. We still hold 10 shares, up almost 900%. PayPal, we still hold 10 shares, up around 15%. SoFi, we still hold 200 shares, up around 125%. Super Microcomputer, we hold 200 shares still, up around 21%. And Visa, we still hold 3 shares, up almost 33%. And then on top of that, we do hold 2 dividend ETFs, SCHD and VYM. We've talked about it multiple times on the channel. At some point, I will sell out of SCHD during the course of 2025. Right now, our cash position is sitting solid around 11,500. That's down from the 13,000 that we had prior to making those purchases in Microsoft and Google. So there you have it. Those are the moves that I have made in the market recently. Let me know if you are buying or selling any stocks currently. I'm very interested in what your guys' thoughts are on the market over the next 6 months to a year. I personally believe that we could see a larger drawdown than what we've currently seen. I think 15 to 20% 5% is definitely in the cards, and a possibility of a drawdown that we could see from the broader markets, that would open up a lot of deals within individual stocks. But that is just my opinion. Let me know your opinion down below. But keep in mind, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. I hope you enjoyed the video. If you did, drop a like down below and subscribe for more videos like this one. And as always, have a wonderful rest of your day. And for the joke of the day, where did the cat go after losing its tail? Check the comments down below for the answer. Thanks for watching.